Hey, how's it going, guys? I'm going to be breaking down a trade in this video. Basically, something I saw forming right now on the New Zealand dollar. And basically, I'm just getting ready to take the trade. I'm going to be very aggressive on this one, and I'm going to buy pretty much when it completes the pattern I see. So let me actually start drawing it out. Okay, so that's a quarter point right there. We're at the 7.000. And this box is 25 pips on each side. Okay. So we have this up move right here. We have a pullback, and then we have a new impulse leg starting right here. Low to high, it breaks this lower high right here. Right here, broke this high right here, and we get this junk, and then we get a spike down. That's what I'm interested right here from this up move. Check it out. I want to measure from here up to this high. Okay. So from low to high. Well, where does that retracement come in? Right at the 786. What does that tell me? Remember, we're thinking in harmonic patterns. That tells me that we might be getting something forming here. So let's see. Measure that. Okay, it's coming in near the erase this. It's coming in near the 786. Looks decent. So let's find out where that D point's going to finish. Okay. So we already have the first part of the harmonic set up, and if you don't see it yet, I'll draw out the triangle real quick so you can start seeing it form in your head. Low to high, inside retracement 786. What pattern goes with the 786? Right, a butterfly pattern. So let's connect, and then I'll start the triangle right now once we find this D point. Okay, so ABA, so remember X, A, B, C, D. Trying to find a D point. Let's do an ABA. A, Fibonacci extension B, up into A. Boom. The 1618, right? For our butterfly patterns coming in right here. Let me do my AXA. A, X, A. Boom. We get the 127 lining up perfectly with the 1618. That's a beautiful, basically Fibonacci cluster right here. So we have a beautiful D point right here. So let me actually clean up the fibs real quick, and then I'll draw out the triangles. So this one. So let's add in that triangle. B, C, D point. Boom. You see that? And initially I wasn't seeing it form, but I started looking at it, and I had a Gartley pattern right here, right? And then the Gartley pattern in here, the D point completion was a 786, and I was just thinking, wow, like I had a similar setup on GU where I had a Gartley pattern inside a triangle, but then it was overall a bigger pattern, right? So it looks like that's what's gonna happen. I'm gonna wait till price hits this point, and then I'm gonna buy it up. Okay, right when it touches this line, I'm gonna buy it up. That's an aggressive entry for a harmonic. Okay, but my stop loss can be real tight. So I'll look for structure. So let me look left. I have some structure right here. So all I have to do is take my pick. Here's structure. Alright, so I have my stop loss options right here. I'll probably put it a little bit low, probably in the middle right here somewhere. just to give it room to breathe. But if this harmonic pattern is valid, pretty much price is going to run away from here pretty quickly. What's going to happen is those banks and everyone, banks and hedge funds and all that, they have their orders sitting there, or they're going to buy it up right there, basically, right? So that's the last push down, get sellers to buy it, and then they'll take it off. All right, that's if this pattern is valid, of course. So price still needs to drop a little bit. I'm on the 1 hour chart, New Zealand dollar, once again, current price action. So look, I'm just waiting for price to drop. When it hits this point, I'm going to buy it up. If you're a more conservative trader, what you can do is, okay, you see those arrows I have right there? You can either wait for a bounce off like that, reversal pattern, and then take it, or you can wait for a double bottom on the 1 hour chart before taking it long. Okay. And if you're a more conservative trader, you would wait for the trend line break. Okay. You wait for the trend line break, a retest, and your entry would be in on the retest. Okay. So there's a lot of ways to trade this pattern. Okay. It's not that simple as just you know, I'm just gonna buy it up. Like there's the most aggressive way is just to buy it up right when it touches your Fibonacci kill zone right here, right? Right when it touches that price point, buy. All right, tight stop loss, take it up. Okay, if you're more conservative, you'll wait for a reversal pattern on the 1 hour chart, 4 hour chart, and off that Fibonacci cluster, and then you'll get in. Okay, there's a lot of ways to do it. You'll wait for a double bottom on the 1 hour chart. That's one way to do it. You can wait for, you know, something like that to form before you take it long. A more conservative approach, even more conservative, is you wait for the trend line to break, right? This trend line. You wait for that to break, and then you wait for the retest of the outside of the triangle of the trend line. My bad. The trend line. It usually makes some type of wick candle, and right when it touches out the outside of that trend line, you're gonna buy. Boom. Okay. Like, I'm more than glad to buy up in a seller's market. Like, let's say this market's dropping. If the Fibonacci's line up right when it touches those fibs, sometimes you can just buy it up and it goes into profit almost instantly. Okay. It just depends on the situation. Like, you have a risk of that it can just keep going, of course, but this pattern is pretty accurate. This butterfly, I took one off GU, and that one paid out heavy, but that was the big butterfly pattern. That's why, remember those higher time frame butterflies, like, this is a 1 hour chart, so on the 4 hour chart, I don't know how good this looks. It looks decent, but for GU, that setup was just something, you know, something out of a textbook. Perfect trade. But this is the same pattern. It's a butterfly. So I'm just waiting for the same thing. Okay. Just waiting for a touch here, and then some type of something to show me rejection, and then we're going to take it long. Okay. X, A, B, C, D. Let's do our take profits. A to D. X, A. D, A, D. Okay, notice where that 38.2 comes in, right where that trend line is going to be. So that's a pretty good location to know that you're going to get a little pullback. So you can look for more entries in here. You can look to stack another order. You can look to take profit and then put another order, whatever. A lot of options. What I like to do is let my order go into profit. I'll wait for a little pullback like this, and then I'll put in another little order in, like maybe not as big as my original, but I'll put something in just to catch the pip on the way to the 618, right? It's our second take profit. And notice that 618 is right above the quarter point zone, so that's a good indication that it's probably going to chill here. All right, and then maybe keep going, but it's going to stall here for a second before it takes off. All right, because those quarter point zones very strong. All right, so this is basically a live trade. Like I'm just waiting. Like this is what it is. It's just waiting for it. Australian looks good as well. Like I already completed the pattern I showed you guys. So let me actually show you. See if I can switch over to Australian real quick. So remember that pattern I showed you guys? It completed beautifully. I missed the entry. See how it went right when it touched? That would have been the best entry, but I'm gonna wait for it maybe to possibly double bottom. Since you know New Zealand has a little bit more to go, I suspect Australian hopefully pulls back a little bit more for an entry position basically. But it's still following the trend line, making higher lows, so it still looks good. But maybe a little pullback, fake out, retest the low possibly, and then take it long again, in line with the New Zealand. But I think New Zealand looks a little bit better. Just because of the situation right here, right? We haven't really taken off from this harmonic. Like we took off perfectly from the touch, but we haven't had that big move up, right? To our take profit targets. All right, makes sense. So I'm gonna be trading in New Zealand right now. I think it's a little bit smarter. There we go. It's perfect. Yes, keep dropping. Keep dropping. All right, see how that candle? Oh, there we go. All right, so now I'm just waiting. Pretty much, that's it, guys. Like, I just mark up my chart. My chart already has the steps included. So let me actually go over the steps. I have a list, so I don't want to miss any, because like I do it automatically. I don't even have to think about it. Okay, so when you mark up your charts, I follow these steps before I take a trade. Right, I make sure I have a trend line. I have some idea of the trend line, right? So in this example, I have this trend line as my base. All right, so when I get a break of that, I know most likely my targets are going to get hit. Okay, so number 2, support and resistance. So in my case, the system I'm using is quarters theory. So flatten up this chart. So okay, so these are my quarter points. All I did was add them in, okay, and then just going one step further, advanced quarter point theory. All I did was add in 25 pips on each side. Okay, so 25 pips on each side on the quarter point, and yeah, those are my zones pretty much. It's very easy to swing them. When the market goes in these zones, you already know something could be forming for a setup, right? Very simple. Okay, so right now we're just below a zone, but it looks like we might break. Once we hit that completion of the D point, looks like we might go up above the zone again, right? So hopefully break this channel right here, this down channel right here that's been going on New Zealand dollar, right on the daily chart. It's been just down channeling, just going into a downtrend, right? But if we get a break of that channel, then we're going to see upside potential past this 7500. All right, we should be aiming for the 775. If New Zealand completes this 775, then for sure Australian's going to be like at 0.8. All right, so let's go back to Australian. Remember, these are correlated, so like 80% or something like that. See, Australian bullish candle on the daily, 4-hour chart, still bullish. See, I haven't entered yet. Waiting for that New Zealand to hit. So I get a better entry. All right, you guys see how my process basically, like I have my pattern complete. I missed the entry right here when it touched, which would have been the best entry. Check out that accuracy. Look at that accuracy on the wicks. It's too good, you know, too good. That would have been the best entry. Okay, or off this reversal pattern. Boom. But I want to see a nice pullback. Hopefully, maybe not retest the low, but at least make a higher low, right? All the way down here, trick a lot of people, and then, you know, we're gonna take it long. But New Zealand looks better to me, so I'm going to be waiting for that one. Very simple process for me, guys. I already have my charts marked up. Okay, so that was number 2, right? Support and resistance, my quarter points. Okay, so number 1, trend lines. Number 2, support and resistance. Number 3, candlestick formations. So on the daily chart, weekly chart, and the 4-hour chart. Okay, those are going to be your bigger picture, and then you're going to go to the 1-hour chart for entries. All right, there's 2 ways to do it. You can go on the 1-hour chart for entries, or you can go on the 4-hour chart for entries. The safer is waiting for a 4-hour reversal pattern, off, like, let's say off this reversal pattern, off this harmonic pattern. You'll get a reversal pattern on the 4-hour chart right here off the zone, and then you can take it long. That's the safe way to do it. Okay, so that's number 3, candlestick formation. So I'll repeat it. Number 3 is candlestick formations, the weekly, daily, 4-hour chart. All right, make sure to pick your bias. All right, before you do all this, make sure to pick your bias, put your trend line, and then pick your bias. All right. Your support and resistance, number 2, should already be on your charts. Number 3, candlestick formations, that should be your analysis top down. Right when you get on your charts, you're going to go on the weekly, daily, 4-hour. Number 4, counter trend lines. Okay, counter trend lines. So if I think this is going into an uptrend, as soon as this hits this zone, this Fibonacci cluster, this can be considered a counter trend line, right? Because it's going down in an uptrend. All right, but we're gonna have to see what happens. Okay, number 5, Fibonacci. So have some type of idea of what's going on with structure, right? Like with Fibonacci structure. What's going on with your Fibonacci, measure out some type of move, see what's going on, measure out. Okay, always measure out. Okay, so number 6 is extra, moving average crossovers, RSI, overbought, oversold, ADX, indicators. That's number 6. Those are extra, but basically I just use naked charts because that's just an extra step in my process. All right. And every pair moves different, so you know what I mean. Every situation is unique, and you can't really trust indicators. There's nothing like just a clean chart. All right. Only use the indicator after you've already found the setup, and you're just using it to confirm. Okay. So in this instance, I have my check this out. This is a good example. So I have my pattern ready. I bet you anything when this price hits on the RSI, it's going to be way oversold, right? And on the ADX, it's going to be exhausted. Like this trend's going to be exhausted on the ADX, right? The 1-hour chart, like the red lines, the red signal line is going to be all the way up. Like it's already going to get exhausted. All right, so watch. I'll add in an indicator, see if I can, without getting out full screen. Okay guys, so I added in the RSI indicator and check it out. Notice on the 1-hour chart, it's already pretty much about to be way oversold. When it hits this zone, when it hits this Fibonacci cluster, for sure it's going to be oversold. Look how low it is already. So right there, I'll probably get a little poke out, and then that'll be the entry, and then it'll dive back in, and then it'll start trending upwards. Okay, that's what I'm predicting. Very simple, you see. Like I don't even need the indicator. I just know it's going to be oversold, obviously, because it's been trending downwards for a while. Right? Even if it's in the 1-hour chart, it's still been slowly sliding down. Okay. So that's why I don't even need the indicators anymore. I can just eyeball it. I already know, pretty much. But they give you good confirmation. So if you use them, go for it. Just make sure that you do your steps properly, all right? So I'll repeat them one more time. Number 1, trend lines. Pick your bias. Number 2, support and resistance. That should already be on your chart. Quarters theories. And what I'm using, you can use whatever type of support or resistance that you do. Number 3, candlestick formations. Weekly, daily, and the 4-hour chart. You go from the top down, okay, to pick your bias. Number 4, counter trend lines. Number 5, Fibonacci. Number 6, any extra moving averages, RSI overbought, oversold, ADX, whatever indicators you use. Okay, that's number 6, extra. That's after you do everything. Okay, after you find your trade, then that's just confirmation. Real quick, while I'm on here, I guess I'll show you how to save your charts. So all you do is on TradingView, okay, on TradingView, you just click this little camera at the bottom. All right, well, you frame it first, like try to get a nice something in there. All right, I'll do on the 4-hour chart. It looks a little bit better. Okay, so look, check this out. I'll even publish it right here. I'll publish it for you guys on TradingView. Just to troll them real quick. New Zealand dollar, H4, H1, butterfly, 127. Looking to go long at this area. Conservative traders can go long after trendline break. On my Instagram, see if they don't ban it, because they always ban you if you put your Instagram on there. Tag them. Oh my bad, I don't want to put New Zealand. Actually, I don't want to get banned. See later, noobs. Alright, see if I can publish. There we go. Boom. Alright, so we'll just wait for those noobs to see the chart, start up-thumbing me, right? Start giving me thumbs up, more followers or whatever. If you guys want to follow me, it's FIP_RicoFX, I think. Or, yeah. Go to my public profile. FIP_RicoFX. Alright, I have chart markups for days. You can see my progression pretty much like as I go along. Like this is what's like, it's like a really good markup right here. I knew price was starting to trend upwards because it broke right here, so a higher high, right? Broke structure, started trending upwards. I measure out my Fibonacci, low to high. There's a 61.8. Get the extension, get a full ABCD pattern, I think, and then we get a pullback to the 50%. We get an inverted head and shoulders. Remember, advanced market formation. There's the counter trend line that held in the head and shoulders inverted, right? And then we get the break. I was long right when it was bouncing right here. I think right when it was touching the 50, I got long right here on this little, yeah, got long right here. And then my take profit was at the 1618. Okay. And I expected it to go a little bit further, and I think it did. Yeah, you see? Boom. Okay. But that was just a beautiful trade. I think that was off a ABCD pattern. See? Off a huge ABCD pattern on the daily chart. So you can see it finishing right here. I don't think I can zoom out here. Let me see. Boom, you see it? Yeah, I would have to do it on the daily chart to show you guys, but yeah, it was a huge ABCD pattern on the daily chart, so I knew it was going to start trending upwards, and it did. And then, yeah, so price took off, and then I caught the trend. I caught the trend continuation, just like I told you guys, advanced market formations. Just following the trend, going with the flow, like I told you guys, going with the flow. So let's see what other markups. I haven't looked at these in a long time. Just showing you my progression pretty much, like over time. Like I haven't posted that much, but like I got a lot better. Like Yeah, you see like this old markup like a year ago. It's pretty good, but I can do way better now, you know what I mean? But yeah, slowly you get better and better. This is a good trade. Yeah. I think this one hit. I think this one might have hit stop loss, not sure, but I know it hit target right afterwards. So yeah, look, it hit stop loss and then took off. Let's see. Yeah, I was just messing around with structure. Like I really just messing around. You see, this is how you get better, guys. Just see, this is how I used to do my key levels. Right? I do them different now. I do use the quarter points, which is funny because they're almost the same. So Astro, pretty much like Astro FX, their key level system is almost the same as my support and resistance system as well. It's just I use the exact quarter point numbers, and they use a little bit different numbers, like a little bit more of a range, you know. Yeah, I got a lot better. A year ago, ABCD pattern that I took. Yeah, that was a good trade right here. Broke the trend line. I remember that. Good trades, good trades. Oh, I remember this one. Yeah, it was a buy right here. Inverted head and shoulders, right at a support level. Advanced market formation. At the completion of the ABCD, pullback was a little inverted head and shoulders. So boom. It's a nice little trade as well. But yeah, guys, so let's go back to the chart. See where New Zealand's at. We're gonna be ready to buy yet. I have my phone in front of me, ready. MT4 ready. You just have to be patient with this. This setup's gonna be beautiful if it does touch, because that's gonna be a flawless entry. Probably a 3-lot, possibly buy, or 2-lot. Depends how aggressive I want to be. But it's setting up real nice, so I know this is going to be a flawless entry. But yeah, this is pretty much it, guys. This is the patience game. I have my setup. I have my pair I'm looking at that I'm being patient for. All right. So waiting for it. So let me go to USD CAD, which is the opposite of Australian. Runs opposite. Yeah. It's not looking good. It's probably going to go up a little bit, hit this little minor quarter point, and then possibly drop. So maybe like a little something like this. Right? And that would make sense with our, if New Zealand's going to go down a little bit more, then possibly Canadian can go up a little bit more. And then make some type of pattern right here, like a reversal pattern on the 1 hour, and then boom, drop. Okay, so it's possible. I mean, let me see. Low to high, sitting at the 382. Yeah, you see how Canadian, I don't really like the way it looks, so that's why I'm not going to be trading it. You gotta be smart, you gotta pick your battle. New Zealand's the best pair I'm looking at right now, so Euro USD I haven't taken a look at. I don't want to look at it right now. Basically just lose focus, and then I'm going to not want to trade. Or I'm going to take a trade over there on the Euro, and I'm not going to trade this one. And I know this is going to pay out, so patience game, guys. What else? I mean, that's pretty much it, guys, for the steps. Those are my steps that I use before I take a trade. if I want extra confirmation, I'll use an indicator or a moving average crossover or whatever, but that's just another step. Always in your steps, stay consistent in how you do them and follow your process pretty much. So if you follow your steps every single time, you're going to notice you're not going to make that much trading mistakes. Okay, so what I mean by that is you're going to be more patient, you know what I mean? You're following your steps. You're not going to just take a random trades for no reason, you know what? Like in the middle of nowhere. Like you're taking a trade when the pair is in the middle of nowhere. Like, what are you doing, bro? Like, come on. Like, wait for the setup. You know what I mean? Like the bankers, the hedge funds, you know, all those guys, they just patiently wait, and then they wait for a good setup, and then they attack. And that's why the market starts moving crazy at those completion points, right? Like this harmonic, I'm sure some big boys got it plotted out, and there's going to be a lot of people buying. All right, so that's why it's probably going to take off right there. I'm just being patient. Once again, this is a mental battle with the market, you know what I mean? If it doesn't hit, it doesn't hit, but I think it's going to hit, honestly. If it doesn't hit, I'll just wait for a trend line break and then a pullback, and then I'll see what forms on it. Okay, simple, very simple. If I miss this right here, I'll just go on Australian and I'll look for a trade on that one. Okay, but I think this one looks a little bit better. Hopefully Australian pulls back, get an entry on that one as well. So follow those steps, guys. Follow those steps that I told you. I always have my markup ready: member, support, resistance, trend lines, Fibonacci, okay, counter trend lines. Be ready with everything. Don't be lazy with your markup, because then, you know what I mean, you're gonna miss very simple trades. Like if you don't do a trend line, you can miss a trend line break, retest, trade. You know what I mean? Simple stuff, very simple stuff, basic stuff. But those basics are the ones that make you the money. Trust me. People complicate trading way too much. I try to simplify it as much as possible. Like, it looks complicated, but it's not. The Fibonacci's and the harmonic patterns and all that, once you clean up your charts, it looks real clean to me. It doesn't look complicated, alright? So it's all mindset, guys. That's all mindset. Just wait for that completion. We're gonna buy. Alright, probably continue the video then. Alright, we'll see what happens. We'll see what happens. Alright, peace.